We're looking at Palantir shares right now after a beat on the top line and a beat on the bottom line. Profit was 7 cents compared to the estimates of 6 cents per share. You can see shares are up just about 5% right now. Current quarter guidance also basically in line. This is also Palantir's fourth quarter profitability, qualifying it for inclusion in the S&P 500. CEO Alex Karp, he told me yesterday it's very important to him because it makes the company more accessible and also widely held, as it would then be included in the SPY ETF.
Valuation, performance, and sustainability. It seems like Palantir Technologies is making waves in the AI industry with impressive fourth quarter earnings that exceeded expectations. However, amidst the excitement, there's a lingering debate about whether Palantir's current valuation reflects its true worth. Some analysts are bullish, highlighting Palantir's growth potential, while others express concerns about the sustainability of its success. So, the big question is Palantir a bubble waiting to pop?
Qualifying it for inclusion in the S&P 500. CEO Alex Karp, he told me yesterday it's very important to him because it makes the company more accessible and also widely held, as it would then be included in the SPY ETF. Karp also says that Palantir continues to work with the U.S. government, emphasized his support for Israel, and confirmed that Palantir works with the Israeli government. He added this about demand and outreach from governments. He said the rise in terrorism, it brings security to the forefront for America and its allies. The only way to effectively and ethically deal with terrorism in combat is to use software. Again, those are Alex Karp's words.
Palantir's recent earnings report, released on February 5th, showcased remarkable growth fueled by the increasing demand for AI-powered products. The company witnessed a 20% climb in overall revenue compared to the previous year, reaching $608 million. Notably, its U.S. commercial revenue surged by a staggering 70%, reaching $131 million, underscoring the growing adoption of AI solutions in the commercial sector. Additionally, Palantir's net income soared to $93.4 million, more than tripling from the same period in 2022. This substantial growth reflects the effectiveness of Palantir's strategy in leveraging AI technologies to drive business success. One of Palantir's standout products driving this growth is its artificial intelligence platform, or AIP, which enables clients to securely harness the power of large language models, or LLMs. This platform has seen unprecedented demand, with commercial customer revenue surging by 32% year-over-year to $284 million in the fourth quarter. Notably, U.S. commercial revenue witnessed a remarkable 70% year-over-year increase, with customer count rising by 55%. The AIP empowers businesses to develop custom generative AI models, providing them with actionable insights and automating processes to enhance decision-making. Despite its impressive performance, concerns about Palantir's valuation have emerged. With a price-to-sales ratio of 25 times sales, many investors deem the stock expensive. Although the company has shown sustained improvement in profit margins, its valuation appears disconnected from its current growth trajectory. While bullish sentiments surround Palantir's business expansion and product diversity, the inflated stock valuation raises red flags regarding its long-term sustainability. Investors are wary of the high expectations priced into the stock, which may pose challenges in meeting future growth targets. Moreover, Palantir has joined the ranks of companies making significant strides in the AI industry despite much of the attention being focused on tech giants like Microsoft, Amazon, and Apple. In its recent fourth quarter earnings report, Palantir surpassed expectations, showcasing its ability to thrive in the AI-driven market. What's particularly impressive is Palantir's success in diversifying its business beyond government contracts, leveraging a low-cost approach to attract new customers. While giants like Microsoft poured billions into AI initiatives, Palantir differentiated itself by hosting immersive seminars, dubbed boot camps, to showcase the value of its AI platform. In 2023 alone, Palantir hosted over 500 boot camps, effectively enticing new users and expanding its private sector clientele. Despite its market cap of $51 billion, which pales in comparison to industry giants, Palantir has proven its mettle in terms of profitability and consistency. Its latest earnings report, which saw its stock surge by roughly 50% over 5 trading days, highlighted impressive key performance indicators. Like its counterparts, Palantir demonstrated the transformative power of AI in business operations, with expanding margins and compounding cash flow.
They think Palantir shares are overhyped on AI. The analyst says they expect 2024 to be another positive year for software, but says the group is likely to see more measured returns versus 2023. The firm also says that they would position selectively for the better second half of the year, but that's only if we see continued increased adoption of AI, lower interest rates, and still reasonable valuations.
However, some analysts raise concerns about Palantir's financial performance and stock valuation. Despite improving, the company's net income and profit margins remain relatively low compared to its peers. For instance, in the last quarter, Palantir reported a net income of $93 million, a significant improvement from previous losses, but still modest for a tech firm of its stature. Additionally, Palantir's operating margin is notably lower than that of companies like Meta. Moreover, its stock valuation metrics, including forward P/E ratio, trailing P/S ratio, and enterprise value or EBITDA ratio, are exceptionally high, reminiscent of the tech bubble of the late 1990s. Analysts also expressed skepticism about the company's future profit growth, further dampening the long-term outlook for Palantir stock. In comparison, other AI companies present more attractive investment opportunities. For example, Supermicro, a key hardware supplier for AI infrastructure, boasts the lower forward P/E ratio and significantly higher net income than Palantir. Similarly, ICAD, specializing in AI-driven breast cancer detection, has formed strategic partnerships with major healthcare and tech firms, indicating substantial growth potential in the AI space. But before we move on, we just want to thank you for watching this far. Some analysts are also wondering if Palantir Technologies could potentially replace Tesla in the Magnificent Seven this year. The sudden surge in Palantir's market popularity has led to speculation about its future trajectory. However, despite Palantir's market euphoria, the company's chief executive has issued a cautionary warning, suggesting ongoing risks. Despite this warning, Palantir's core business of detecting and preventing cyber threats continues to perform well. On the downside, William Blair analyst Louis De Palma has expressed a bearish outlook for Palantir stock, citing concerns over negative developments in government contracts and slowing commercial growth. This sentiment contrasts sharply with the recent surge in Palantir's stock price, which has risen by 26% in a single day. Additionally, Palantir's sky-high gap-measured trailing 12-month price-to-earnings ratio raises concerns among value-seeking investors as it far exceeds the sector median P/E ratio. However, despite these concerns, Palantir's fourth-quarter financial results have been strong. The company reported 5 consecutive quarters of gap-measured profitability, indicating stability and growth potential. In particular, Palantir's U.S. commercial revenue saw significant growth, increasing by 70% year-over-year. Furthermore, the company's fourth-quarter revenue surpassed Wall Street's expectations. Looking ahead, Palantir expects moderate sequential revenue growth for the current quarter, with revenue projected to range between $612 million to $616 million. While the company's financial performance has been impressive, questions remain about whether its earnings justify the recent surge in its stock price. As for Palantir, its CEO, Alex Karp, isn't one to hold back, much like Tesla's Elon Musk. Karp's penchant for making unconventional statements has become somewhat of a trademark. He once described Palantir's quarterly commercial business as bombastic, baller, and incomprehensibly good, a far cry from the typical corporate speak found in financial press releases. While Karp's bold persona may appeal to some, it could also deter certain investors, echoing the polarizing effect Musk's behavior sometimes has. Karp's statements often make headlines, adding to the intrigue surrounding Palantir. From asserting that government entities preparing for conflict are either using or considering Palantir's services to suggesting that skeptics' businesses are destined to fail if he's right, Karp's confidence in his company is unmistakable. His remark about the world being in a state of increasing chaos and danger adds to the intensity surrounding Palantir's operations. However, it's essential to recognize that such perceptions of chaos and danger have persisted throughout history. While Palantir delivered a solid quarter, it's crucial to approach its valuation with caution, especially in light of the recent surge in its stock price. Considering the need to carefully assess Palantir's long-term prospects and market dynamics, investors might do well to wait for the stock to cool down before considering a long position. So, with all this in mind, what's your take on Palantir's bold statements and market position? Share your thoughts in the comments section below. And that's it. Make sure to smash the like and subscribe buttons down below. Additionally, if you want to know more about Palantir's recent surge, just click this video right here. Thank you for tuning in and stay tuned for more exciting content in the future.